the big debate we're trying to figure out at the moment is, on one hand, you have this trade narrative that is being very much driven by the White House. On the other hand, we're trying to figure out whether the Fed will cut rates. Do you think the Fed is going to cut rates? The market is pricing it right now. Is that a mistake?
I think it is a mistake. I think we all heard Governor Powell speak this morning. And what I heard him say is that he's going to be very prudent. He's going to look at the numbers very carefully. And he is not going to be swayed one way or another. So I didn't hear him say that there would be a rate cut, that there would be 2 rate cuts, that it might happen in July versus September versus December. But it seems like the market was hearing some of that and kind of took off, as we just heard. My feeling is what is the directionality here? And I think there's a lot more discussion going on. Are these trade talks getting more delayed and more tweets going out potentially to impact interest rates earlier? There's some people who believe in that conspiracy theory. Or is it truly, sort of organic?
What is your base case on the trade talks? Let's focus here on China. Where do you think it's going? Do you think that we're going to get a deal done? Or increasingly, as many in the market are beginning to assume, that we are going to see tariffs becoming a long-term part of the narrative between the United States and China?
I think the process is probably going to take longer. There are going to be intermediate steps. We'll hear, as we go into the Japan meetings between the finance ministers and then the leaders, we're going to hear more and more. Some things may be agreed, but we have both the trade talks going on between the U.S. and China. We also have the very big issue of intellectual property going on, but that we haven't heard too much about, except with the case of one particular Chinese company. So I think that the real resolution of all of these topics is going to take much, much longer. The Chinese seem to have realized that the usual process of saying the right things, seeming like they're going to make the changes, but not really actually agreeing to the details of the changes, may not work this time. So that's why I think this will take much longer.
Now, you invest at Rock Creek for institutions, endowments, pension funds, and so on.
Yes.
Last time you were with us, just a couple of months ago, very bullish on China and on the likes of Brazil in terms of emerging markets. Has anything changed given the events of the last couple of months?
So still very bullish on emerging markets. I think the reason for that is that the growth rates, even if we see the Chinese growth rates going down somewhat, are still much higher than ours. In the developed world, in the U.S., when we talk about growth rates, we're talking 1.5% to 2.5%. When we look at China, we're talking about, if the numbers are real, in the 6% range, maybe plus or minus 0.5%. If we're looking at India, quite high growth rates in the rest of Southeast Asia. We've seen incredible growth in Vietnam in recent times. So there's a lot going on in emerging markets, which has a lot of momentum. But more importantly, a lot of new businesses getting built. So they're not just building new roads, they're building new banks, they're building new payment systems, they're building new hospitals, they're building new education and health systems. At a time where it is very difficult for us in the U.S. to build anything due to regulation, some of it very good and necessary, but some of it also delaying everything. Whether we have HIPAA in the health sector, which delays things, it might have a lot of advantages, but the Chinese can move very fast in health research. So I think you're seeing a lot of companies have a lot of value, but you may not want to be investing in the ETFs. You may want to look at some of the best companies, particularly mid-cap size companies that are oriented towards local growth in emerging markets.
So local growth, and that again then wouldn't depend on rewriting of trade routes, if that indeed is what ends up happening.
Exactly. And if we look at particularly China, we saw that happening already a few years ago. China started doing two things. One is moving into impact investing and sort of cleaner fuels, not just because of the Paris Accords, but because the air was not breathable, as we know. But secondly, they started building an economy that is starting to gravitate towards local consumption. And that started really before this particular version of the trade war started. And they sort of saw that this could happen over time. And I think they look at things over 100 years. And they started planning for that eventuality before we even started this war.